Hey, welcome back to the Hub channel. My name is Brandon Burton, and we have an amazing show for you. As always today, we have our Haikanashi guy back with us today, Jeff Beamer. But in today's show, we're going to be going over Jeff's last trade that he did last week, his Apple trade. It was a breakout trade, so we're going to see how that turned out. We're going to cover some headlines, go over the markets. We're going to look ahead and see what's happening. But Jeff, just before the show, you mentioned that you're going to be talking a lot about consumers in today's show, about what's happening right now with consumer spending and some other things and how that impacts the market. And I think a lot of people in the audience now are feeling this. And so this is something that I want you guys that are watching to do throughout the show. Watch for what Jeff's talking about. See how that is impacting your life and how that's kind of related to the market. And if you guys see what's going on with consumer spending and other things, and if you have any questions for Jeff about consumer spending, by all means, throw that in the comments below. But Jeff, what is happening this week? How are you doing? How did last week's trade go? So much to catch up on.
Well, let's start with last week's trade. It was Apple, and Apple had earnings last week. And speaking of the consumer, you know, that's a big driver behind kind of consumer sentiment. It's one of the biggest holdings in the S&P 500. Right. So what happened is Apple showed its hand right before its earnings event, right? The day of earnings, Apple gapped up and implied volatility stayed high. And this allowed us to actually take profits before the actual earnings event, which occurred after market close. This trade was up over 15% on risk. And so we decided to take profits, get out of that trade, and that was a good thing because Apple, once they declared, the stock really didn't move much. And you can see going into that event, that stock had a 3-day uptrend, just boom, boom, boom. And that, to me, was that the stock was showing its hand. So we had a 3-day trade, maybe 4, I believe. Okay, 4, I'll give it 4. 4-day trade, earning 15% on risk. And I'll take those numbers, Brandon.
Yeah, I mean, obviously 15% return on just a few days, a risk for a trade, really good. And if you're talking about consumer and all that kind of stuff in the market, Apple couldn't have been a better play to pick to demonstrate what's happening right now. Jeff, so, I mean, what is going on with consumers?
Well, I mean, there are headlines galore coming out around about the consumer. And when it comes to looking at markets, to me, it's important to look at a lot of evidence before forming an opinion. And a lot of it I like to look at is anecdotal evidence. For example, some of our headlines that I'd like to touch on this week, for example, are car repossessions. I'm hearing from a good friend of mine that actually is involved in an auto auction here locally. And he has actually given me some information kind of on a national level where they are on their auction blocks are having a lot more car repossessions, bank repos that are coming up for auction more than really they've had any time this year. This kind of started, he said, back in March and April. And I think it made headlines back then. But car repossessions continue to rise. And then something popped up here in the past couple of weeks that's going to take a little bit of time to filter through the markets, but that is the lawsuit against the National Association of Realtors, NAR. This lawsuit ended up in a $1.8 billion verdict against the NAR and a couple of different brokerages regarding commissions. Now, what's really ironic about this is that I recall when I sold my house years ago that I actually negotiated my commissions. I pretty much said that, hey, here's what I'm going to pay, and if you want to do the deal, here's what we're going to do it at. But apparently not everybody realizes that or gets the message, and that's what this lawsuit was all about. Apparently the commissions being charged are above what is done globally, okay? But nonetheless, this lawsuit was rendered. The verdict was rendered, and of course, NAR now is appealing it. But what's going to happen and how it will filter down is the effect that it will have on buyers. Okay, real estate agents will have less of an incentive to represent buyers, and it might take the buyer away from the market. What that will do is have sellers come down in price. We're not even talking interest rates here. We're talking the effect of a major lawsuit that will have on a ripple effect through the industry. We are still quite a ways out from those ripple effects, but look for that in 2024 and the housing market and how that affects the housing market, because I think this is really a game changer for something that really wasn't broken, but has been in place for decades and decades. And now all of a sudden it's going to change. And then finally, consumer credit card debt continues to increase. Right now, the debt of U.S. consumers, the credit card debt has exceeded $1 trillion. And I have a chart here that we can look at that is from the Federal Reserve Bank of New York. Okay. And this is showing just the skyrocketing of U.S. debt. Now, remember how this filters out. This filters out with, say, those with lower credit score, maybe those with lower income. Maybe that's because that's where we're seeing the car repossessions, for example. We're not talking high end. They're not seeing Ferraris and Mercedes and Bentleys on these auction blocks. They're seeing more reasonable, Toyotas and Fords and GM products on that lower end is what they're seeing. Okay. And so now you have the consumer racking up credit card debt, and all that free money that they got during COVID is now ended, and they're left with, well, their buying spree is over, and now it's time to pay the piper. And I think that's really going to come home to roost here really going into 2024, Brandon. I mean, it is, those anecdotal things add up, and it really causes some concern for consumer.
I mean, I couldn't be more excited to hear about that lawsuit. I think that industry needed to be shooken up more than any other industry in the entire world, pretty much here in the U.S. I don't like I don't like the fee structure, and I think that could cause maybe some new markets to come out, maybe some new ways of doing things that I actually think would be more beneficial for the consumer long run. But the picture that you painted here, obviously the consumer spending and then the repo market picking up. I know some repo dealers personally, and yeah, they're picking up cars like crazy. And so on the street right here, we're seeing that happen a lot. So interesting stuff here. So what are you seeing? Are you seeing the effects of this yet in markets right now, or what are the markets looking like?
Well, that's what's interesting. Where the markets are focused on right now are interest rates. And if we jump to the charts here, I've got a chart of the SPY up, the Spider Index Trust. And the minute the Fed did absolutely nothing last week and talked like, hey, we're going to pause here for a while, the market interpreted that as good news, and off they went. I mean, the Spider Index Trust here literally bounced off major support at 410 and just shot up like a rocket. And you can see today we ended up 22 basis points. Not really much of a move today as the market kind of digested everything from last week. But this was really interest rate driven, this sharp rally. And if you happen to watch my colleague Rob Roy and I later in the week, if you're a member of any of our publications, we do an insiders meeting on Thursday nights, and you'll hear Rob especially talking about these vertical moves. And neither of us like these vertical moves because they are most likely to fail. Okay, and all we did here is we really just we just kind of came up to and haven't really even met yet with our downward sloping moving average. But let me put this moving average on. And we did have a bearish cross about 2 weeks ago. But as you can see, this rally, man, just right up to 435. And isn't that interesting? Look at the area that it kind of came up to, and that's pretty significant resistance right there. So this is going to be a definitive mark in the sand. If we can break through 435, and then yes, it's only $5 higher at 440, but if we can break through that 435 to 440 level with some decent average daily moves, nothing extravagant like we saw last week, we could have a nice Christmas time rally. Otherwise, the bears are going to take this down, and they may take it down as fast or faster than they took it up, Brandon. I mean, it's very interesting this week.
Oh my gosh. I mean, watching all this, we were originally, it looked like we were oversold, and now it looks like we're almost overbought to that buy point where you're looking at this right now, where that cutoff is. And yeah, I mean,
Right.
this is going to be interesting the next little bit here. So I don't know what's going to happen, because I mean, to watch it, I mean, looking at your charts and especially like reading into all these consumer reports that you're reading and stuff here, I just don't see how we can keep going higher and not bounce back down a little bit and fade this a little bit more. But that's just me looking at it.
Well, as soon
I
as the
don't know.
market starts, yeah, as soon as the market starts to look at something else other than interest rates,
Yeah.
that'll filter out. Let's take a look at the Qs
Yeah.
real quick. And the Nasdaq was up about 40 basis points, but as you can probably guess, it rallied up hard as well. But look where it rallied up to, right at 370, which is significant resistance in its own right. I mean, look at all the trading that has gone at 370, really from the summertime up till now. How many times has it crossed? 1, 2, 3, 4, 5, 6, 7, now 8. This is the 8th attempt to cross either up or down this 370 mark on the Nasdaq. All right. So, big power players are here in the Nasdaq, but they may be out of fuel too. Now the IWM, which are small caps, this has been the problem child here. This index, we talked about it last week, was hanging on by its fingernails of dropping down below some major support and going into no man's land. Okay, literally going into no man's land. I've given you more chart data here so that you can see that there is really nothing below on IWM. If we failed below that level of support last week, around that 163, 160 level on IWM. Ironically, today was not a good day for the small caps, down over 1%, 1.22%. They went down, Brandon. So really, this trade that has been in place for a while, go long Nasdaq, go short IWM, to some extent that's still at play here. So we'll keep an eye on those small caps, but they've been very interesting.
Yeah, I like that. And your chart reading, I mean, just looking at the way you paint the picture on these charts is so valuable. I mean, and if you guys don't know this already, Jeff has an incredible guide that you guys need to check out to go see a little bit more about what Jeff teaches and how he teaches his things. So go ahead and check this guide out. It's on straddles and everything else going on there, so you can learn exactly how to put those trades on, your exit points, your entry points. It's such a good thing to have. Now, Jeff, so after looking at the market, what are you looking forward to this next little bit here?
Well, we have earnings coming up, this week.
Yeah.
We still have over 800 companies that are declaring earnings this week. And, that's a lot. And we started off today, both pre-market and post-market, with a bunch of earnings announcements. Really, we get into the heart of it tomorrow on Tuesday, when we do have a couple of economic reports coming out. We have U.S. trade deficit coming up at 7:30 in the morning, and then the consumer credit, interestingly enough, consumer credit at 2 p.m., that is Eastern time, tomorrow afternoon, not to mention all the earnings announcements. So the kind of the ones to watch tomorrow, On Tuesday are DR Horton, a major home builder. In fact, one of the largest holdings within the XHB, which is the home builder ETF. We have Uber, and we also have eBay. Speaking of consumer, we also have eBay. Those are big potential movers tomorrow. And then on Wednesday, we have another economic report with wholesale inventories. Not a big market mover, but we have some notables. And those notables include Walt Disney, okay, and also the financial firm Affirm. Okay, so Walt Disney and Affirm are notables on Wednesday, and then Thursday, more economic with jobless claims first thing Thursday morning. That could be a potential market mover. Well, it's actually the revisions that are the market mover, never the actual report, because they always, I wouldn't say lie on the first report, but let's just say they mislead on the initial report.
You're understating what happens here, Jeff. You're understating. How could you be off by 100,000 jobs and things? Get out of here! If I was off $100,000 on my taxes, I'd get in big trouble, Jeff.
Hey, do you remember the hanging chads of back in the election years of back in Florida? The hanging chad. Do you remember that? It's just count them, man. Just count them. But Thursday we end up with BDX, which is Becton Dickinson. That's a healthcare provider, and Fiverr. Just some notable kind of more familiar companies that are coming up, and that's what we kind of round out the week with. But we are going to really focus in on one stock, and all of these announcements over 800. We're going to direct our attention to Affirm Holdings. That symbol is AFRM. Okay, Alpha Foxtrot Romeo Mike. AFRM is the symbol. And the trade, what we're going to do is, Brandon just showed you that the link for the guide, and that guide goes over my basic strategy behind straddles and strangles. Okay. Now, the reason why we use these strategies is when there is the potential for a big move in the market. Now, you don't want to put these strategies on a stock that there's really no catalyst for the stock to move a lot. Okay. We put these on in anticipation of a stock that has, number one, the potential to move big, and number two, has done it in the past. And Affirm, I don't know, it might have made its move already, but I think because of its space, because it's a consumer lender and a consumer payment processor, that we could be seeing maybe everything from an increase in revenue from them to maybe payment failures where people are not paying on their purchases any longer. We could see either, and that is why maybe a straddle or strangle. In this case, I've done what I call a baby strangle, where I'm buying a call and buying a put at two different strikes, but the same expiration. I'm buying that ahead of earnings, which comes up on Wednesday after market close. So Wednesday after market close, I believe, is when Affirm has their earnings announcement, and we could see some real volatility in that space, Brandon.
Yeah, that's an interesting trade. I obviously love these types of trades that you do, so it'll be interesting to see how this one plays out, Jeff. Oh my gosh. I appreciate your insight as always. We have so much happening in the market right now, and with just like you said, like all the reports, the Fed last week, that made some major moves in the market, in the crypto markets. All the markets moved quite a bit, which is great, but that just creates trading opportunities for us. So if you guys want to see how Jeff continues to trade these types of things and more, by all means, go ahead and come back here next week. Let's watch out, see what Jeff did. Go check out his guide if you can. But Jeff, thank you so much for dropping by the channel again today, and we will see you all in the next one.